platinum. On the line now from London is David Jollie, strategic analyst at Mitsui Precious Metals. The platinum industry is an interesting one, and also the platinum price. David, thanks for joining us, because we've maintained this discount to gold for quite a while now. I personally think in 2 years' time we'll be talking about $100 premium. What do you think?
I think that's a perfectly reasonable view. I think the two metals, there's no particular reason they should trade close together. You look at the financial issues of how you produce them, and you look at where they're used. There's no reason they should trade that closely, but there's a certain rationale to it, I think, when they are trading close, to look at the premium or the discount. And it does seem to me strange for platinum, which I think is in the end a slightly more useful metal and has a lot of supply side constraints, to be trading lower than gold. And I think the general market consensus would be that yes, we'll see a higher platinum price than the gold price in a 1 year time horizon, maybe longer, but possibly before that as well.
Yeah. Okay, so the Lindsay Williams and David Jollie hedge fund is going to be open today. We're going to need a lot of money coming in, and we'll buy platinum at $11.55 and sell gold at $11.75 per ounce, never mind the US dollar. This is a relative play. And what I like about it, I mean, apart from the fact that the Eurozone has been pilloried by many people for many years, and quite rightly so, is that it's starting to show signs of life, and therefore people might be buying some of those ghastly cars that make that ghastly noise, in other words, the diesel cars, and therefore platinum demand will pick up.
Yes, I think that's quite likely. I think we've had so much bad news about Europe for a long time now that it's easy to kind of miss the, maybe it's a little bit premature to call them green shoots of recovery, but to miss any positive signs there. There is growth. It's not convincing, it's not particularly strong, but there is good growth there. And diesel cars actually are, quite frankly, a mile better, considerably better than anyone would imagine if you kind of last came across them in the 80s or even the late 90s. So I think a diesel car is attractive. Against that, there's a little bit of an issue from low oil prices, which is just taking away some of the attraction for a diesel car. And I think there's also some issues about particularly urban air pollution and the perception of diesel. I think, having designed diesel catalysts in my earlier in my career, I think that's a little bit unfair, but I think you will see more diesel cars being bought in maybe a slightly lower market share, but in a rising market, and that's a positive for platinum, certainly, as we go forward.
Why don't we have a look at what happened during the appalling 5-month-long strike that afflicted the South African platinum producing industry over the last year. What I didn't quite understand was, apart from the initial spike, which is a few speculators, a few punters getting in there, the price in US dollar terms never went up. It seems as though these stockpiles just came out of nowhere. Were there Swiss gnomes suddenly getting them from underground and selling them on the open market? Was it Russia? What actually happened there? Where did the platinum metal come from?
Well, I think you have to take a step back first and say, when did the price rise? And actually, we kind of knew there were going to be strikes, so we strongly expected it before the turn of the year. So actually, I think you saw some of that price strength before that. We saw other things in there. We saw sponge premium going quite high, and sponge is really what's coming out of South Africa rather than ingot, and it's what industrial users want. So there was certainly demand out there, but I think at the same time we saw, I think, quite responsible behaviour by the miners, saying we would normally keep stocks to make sure that we can guarantee supply, and that might be bad for price, but I think it's good for keeping consumers happy, for keeping consumers confident they can use this metal. So some of that was stocks from the producers. And I think we can also look at it and say there's a lot of industrial users who I think have taken advantage of low prices in the last few years to hedge metal forward. So effectively they've already bought their metal. So from their point of view, they don't necessarily need to buy, even in a 1, 2, 3 month timescale. They may be able to hold off buying for a period of time, and I think that gives them a little bit of flexibility. So I think we saw that sort of buying pressure a little bit lower, and we saw this responsible behaviour from the producers working in some ways to lessen the price strength of platinum. Now in the long term, I think that's probably a good thing for the metal and for the market, but in the short term, I think both of those things allowed us to have much lower price rises than we've seen, or than we would have expected to see rather. And I think that probably has weighed upon sentiment at the moment, that people are saying, well, if a 5-month strike doesn't do this, what could drive platinum higher? Well, the answer is stockpiles are clearly lower than they were. So if you had further strike activity or strong demand, you can see reasons for prices to strengthen. So I don't think it's
indeed. It's very, very sad.
I don't think it's impossible to explain what
sorry,
happened last
David.
year,
It's very, very sad as a South African and all South Africans to see that we have a monopoly. 75, 76% of PGMs, known PGMs, are under South African soil, and yet we still can't make a profit. The companies can't make profits for various reasons, some of which you're seeing on your screen now, and we're getting different messages from the two big boys, i.e. Anglo American Platinum and also Impala Platinum. Platinum is in its strongest position in a decade, says Chris Griffith, who's the CEO of Anglo American Platinum. On the other hand, Terence Goodlace from Impala Platinum, number 2, says the above ground stocks for us is still a very, very big thing. Would you invest in the metal, the ETF? Would you invest in the stocks, given what the rand is doing? If you're not allowed to say so, please tell me. But in general terms, the metal or the stocks?
I'm not allowed to do either, so for me that's a nice easy answer. But I feel there's certainly progress from the companies themselves in controlling costs and understanding how they run their business, in trying to mechanise and trying to control capex, and that's a positive sign. I think in the metal, it feels to me that over a period of time, one would expect prices to rise, and that's partly from supply side, partly from recovery as well. So I sort of sit between the two views. I think we will see higher prices, but I don't necessarily see a reason why we'll see that yet. But I can see positive reasons why someone would wish to be long either the equities or the metal. And as you say, South Africa is so dominant in the end. If the metal's needed, it's going to mostly be coming from South Africa.
David, we'll leave it there, but thanks very much for joining us this lunchtime. That's David Jollie, strategic analyst at Mitsui Precious Metals.